I think this Davos is incredibly timely. I know that at CFC folks were celebrating spot Bitcoin ETF, and we are continuing, right? We are all very excited. But the question about sustainability is always a very important point in order to actually use the opportunity to the best and make sure that we draw lessons from the previous cycles. We draw lessons from all the crisis situation that we've had, and we've had quite a few last year. And we actually use the momentum in order to gather forces and move forward. Today we'll have different perspectives. I'm really very excited to talk about this. And as it's the last panel, we'll be happy to continue the conversation with the drinks. My very first question is, I guess, as a way to introduce yourselves, can you please tell everyone what is your role in building up this ecosystem, and how many crypto cycles have you already seen and suffered or enjoyed? Let's start with the left side. Thank you.
Well, thank you so much, and thank you for 1inch Friends for organizing. My name is Viktor. I founded RockawayX in 2017, but in crypto since 2015. So I guess that's 3 cycles. And it's either great and super good, or it's really, really bad. So I like that roller coaster. We are not bored. We manage $1.2 billion now. We were seed and Series A investor in 1inch. And the $1.2 billion is $600 million is investing. We also provide liquidity to DeFi protocols. So this is how we add value. We actually provide liquidity to lending, borrowing platforms, decentralized exchanges. And $600 million is running IT infrastructure.
Amazing. Thank you very much, Victor. Let's move forward. The blockchain side. Brian.
Thanks. I'm Brian Gallagher. I'm the co-founder of Partisia Blockchain. We're a layer 1 blockchain that specializes in delivering privacy-preserving computation. So the not fancy way to explain that is we have use cases like private payment networks for NGOs like Red Cross. We have a secure bridging technology where all the nodes are running a decentralized bridge that's secured by threshold key signature schemes, MPC tech. And like really what we're trying to do is enable like real world use cases to come on blockchain, like private voting. So you can have whitelisted voters, but who can have their vote kept private, but you get the transparency of the outcome on blockchain. So that's like our really focus area.
If you formulate in like one main thing for those here who are from the WEF side and not from the crypto side, what is the added value of your blockchain to the ecosystem?
Sort of enabling like real world use cases, like when with the Red Cross, we're able to give beneficiaries the aid in cryptocurrency, but it's kept private between them and the Red Cross. So if you're in a war zone or danger zone, you're not able to have like criminal groups detecting where the money's moving and going and stealing from the beneficiaries. And so anyone who works in that NGO space would know that 80% of the cash that's delivered in these zones is sometimes lost. And it can be much worse than just lost, stolen, corruption. So this is a way to really streamline your processes and potentially save an 80% loss back to zero.
And how old is Partisia Blockchain?
So we've been around since 2008 doing advanced cryptography solutions for enterprises. So like, for example, Bosch was a customer of Partisia. They did Internet of Things data on their devices to keep privacy for all of their users. So if you're doing washing machines, it's relaying the data to the company, but it's not revealing whose washing machine it was. So
cool, pre-OG.
Yeah, many cycles of crypto, good and bad. So
all that we had. Thank you very much. Okay, Dune and Fredrik.
Yeah. Yep. I run a company called Dune. I've been in crypto personally since 2015. We started Dune in 2018, so that's 5.5 years ago and a couple of cycles ago. Our mission is to make crypto data accessible. So blockchains are, for the most part, made to write and verify transactions to the chain, and we try to make it very easy to read from the chain, so we make it super easy for anyone to analyze whatever is happening on the chain, and then anyone can go on our site and create dashboards, and then you can see what other people are doing. So we have the largest community of on-chain analysts in the world, and there's a couple of 100,000 dashboards that you can browse, and you can slice and dice this data in whatever way you want. And we believe that if this space is to do something really useful, you need to have traction and have users and have retention, just as any sort of tech startup. And we hope we can help everybody assess what is real and what is not so real, and make sort of the use of data in making decisions and building products more easily accessible.
Then let's maybe start with some on-chain data, because data is our all, right? This is the basis of everything. If we want to compare the current cycle, the current bullish trend with the previous one, what are the difference? What are the main differences? And do you see any particular interesting trends that are different from the last cycle? Because like in the end, TVL is like still proportionally not that large as we had during the last bullish cycle. So can you please dissect for us a little bit what's going on?
Yeah, absolutely. So I'd say there's kind of like two big, call it narratives, or things that needs to play out, I think, for the industry. One is the costs need to go down, the ease of use needs to go down, and I think maybe half a year to a year ago, for instance, in the Ethereum ecosystem, it was there's going to be these layer 2s and all of these things. I would say that was the big question is always like, what's just a narrative and what's like actually playing out? And I think what's exciting we've seen is like these layer 2s and what's not are seemingly actually playing out. So the amount of gas spent on layer 1 to verify layer 2 transactions is growing. It was $30 million sort of worth of gas spent on Ethereum in December for this, and it's growing. So I think, and then the gas costs are coming down on the layer 2s. So while Ethereum can easily be $1 a transaction or more, these are like the layer 2s, the headliners sort of layer 2s are more in the like 15 cents range. So I think that is happening. That's exciting. I think in sort of the other thing the industry needs to get right is actual sort of use cases. And of course, there's stable coins and some of these things that I think important. But beyond that, and obviously the last cycles has been basically DEX trading and NFTs. And so DEXs, they now do around $100 billion in monthly volume. And at peak, it was around 300 billion. So it's down, 2/3, but it's sort of in a way quite sticky relative to NFTs, who's down now to, I think, is down like 80% and has grown a little bit recently, but not a ton. So I think we see these categories are like emerging a little bit in this cycle, but it's not really sort of. It's more emerging from the ashes a little bit, more so than like really driving in a big way in the same way it grew in 21. And then what's also interesting is now there's some real activity on Solana. So obviously the price has been rallying and there's been sort of narratives around it. But the DEX trading volume on Solana is now about 20% of the ETH volume on the whole, every ETH ecosystem. So not just Ethereum layer 1, but basically so there's 100 billion a month on all the different Ethereum chains and Polygon and all the adjacent chains. And Solana did 20 billion in December. So Solana is actually doing now 20% of the DEX trading volume that the Ethereum ecosystem is doing. And this is up from like 2% a year ago. So it seems like the Solana activity is actually picking up on the chain as well, not just sort of in the narrative and in the price.
Well, you mentioned the differences in terms of, like it's all about growth, but lower growth is perceived worse than a peak like by the community. But as we are talking about sustainability, maybe from the infrastructure point of view, it's actually more sustainable when the growth is not that steep. So to the blockchain side, how do you see this load on the infrastructure, and how do you compare this two cycles? And
yeah, so over the years we've kind of gotten a bit lucky with a use case that kind of saved on-chain activity. So in the way beginning, it was like mining only. Then centralized exchanges came. Then the ICOs came. That really just went, everything started really picking up when that happened. Then like DeFi summer kind of came out of nowhere after the ICO bust. So then all of a sudden that picked the market up. And then NFTs kind of came shortly after. So the rally just continued and continued in these new directions. And those last two use cases, the DeFi and the NFTs, were kind of fast, overnight successes.
You forgot about Metaverse, that everybody already, I guess, forgot about without understanding what is it exactly, right?
Yeah, Metaverse was more words than real action. I mean, DeFi did get up to $300 billion, right? I mean, that's pretty incredible. But I guess the point I'm getting to is the next phase is about what is like the hero use case. So people say, well, it's real-world assets coming to blockchain, or it's the ETFs and new inflows from institutions. And I think those are really good, but we have to adjust our expectations and mindsets, because those are things that take time to maturity. It's not like a snap your finger overnight, everyone's locking funds in smart contracts. So those will continue to grow and develop, but as you see with the ETF launch, they're a lot more patient than the traditional crypto participant. So they're sitting and waiting on the institutional level. They're not just dumping all the money in overnight. So they're kind of warming up into this, deploying over long dollar cost averaging, investment strategies. So we can't expect that to be an overnight sort of hero use case. So we need something for the retail crowd, whether it's the gaming and ways to earn money from places like the Philippines or Brazil, microtransactions, municipalities actually adopting voting, things like that. Those are going to take a long time. So I don't know what it will be, but the only way that things are going to really pick up at the speed we're used to is if there's some type of hero use case that pops up. And I don't really know if any of us knew what that is now. That's like the $1 trillion question, right? So.
But I like how you pinned it. I've never heard it's hero use case. I think hero is better than killer. We
need a hero use case, but the good news is in the long run we're seeing the truth of the migration, which is the real world assets, the ETF products. That's going to support this industry for the next 10 years of growth. But in the meantime, to get that action, something hero needs to occur.
Investors' perspective.
Yeah, I would just say I slightly disagree, just to make this discussion interesting. We have 7 million monthly active users of blockchain already, on-chain, And Solana is 1 million, Ethereum, including L2s, is a bit like 1.5. BNB and Tron are actually the top chains. But 10 million monthly active users, it's not bad, And, but the valuations are still low. The valuations that we see right now in the seed rounds are maybe 10 million. Series A, I don't know, 70, 80. What was your last valuation, Fredrik?
1 billion.
Yeah, so Fredrik is really good at timing the market. And I think this is my learning over the 3 previous cycles. In crypto, we are basically investing early stage in public markets. So we have to manage very carefully the cycle. The cycle historically has been very easy. It's 4 years. It's a 4-year cycle. And basically the biggest bull market is 1 year after halving. Halving is this year. So 2025 normally, just if you look at the numbers, should be the bull market. And so that's why I'm saying to the investors, and I was last week in CFC San Moritz, the time to invest in crypto is now. Don't call me when Bitcoin is at 69,000 or 70,000 again, because then we don't need capital, everything's expensive, and all the rounds are oversubscribed. And that's why I came to Davos. I came to speak with investors and tell them, please don't invest when things are expensive. Invest when things are cheap.
Do you think they will listen to you?
I don't know. If you help me, we have the whole promenade to go to tonight, so we have a lot of work, but the whole week in front of us, But
is it a human factor that, people are tending to invest when it's like all green or is there anything else? And obviously there is anything else related to crypto, lack of knowledge, like lack of understanding, skepticism. Like, is it something that will finally get over during this cycle, in your opinion? Or we still need the killer app, the hero app, whatever, or something else, or more regulations to reach to that point?
Yeah, well, I think, of course, as an industry, we are really bad at educating because, we are technical and we love kind of like fighting with our friend, like who is the smartest? What is like the next storage proof and the zero knowledge proof protocol, and how we are going to basically accrue value to data availability layers. It's bullshit. Like, nobody cares in real world. What people care in real world, they tell me, Viktor, what's the ChatGPT moment of blockchain? And it's already there. I think it's like stable coins. Now, we are providing liquidity into a basically operator in Mexico and in whole LATAM, which is helping people to get US dollar as a stable coin. Because you don't want to be living in Argentina where the inflation is like 20-30%, and you don't want to be holding Argentinian pesos. So in Argentina, when Red Cross is actually collecting donations, people can scan the QR code of DAI, the stablecoin on Ethereum or on L2, to actually donate to Red Cross, because they cannot donate with pesos because 3 months later would be worth much less. So I think stablecoins, clear innovation. Number 2 is just automation of financial services. The fact that I can borrow against my Ethereum with one click. I went on vacation last Christmas. I borrowed, against my ETH without a bank, without lawyers, without a contract, in just a couple of seconds. Yeah.
You wanted to add on?
I would agree that stablecoin is kind of like an underrated use case. It's not sort of super flashy or seems, in a sense, doesn't seem that revolutionary, but I think it's actually quite a big deal, and in and of itself is a strong argument for crypto, not just like the sort of libertarian, I can control my money type of thing, but also just like I think the convenience will get there. As just like one example, our team who's remote met up in Poland for like an offsite recently, and we have people from all kinds of countries, and some of the folks wanted to share the cost of an activity they did, and they realized like the easiest way to do this is just like stable coins. It's USDC is the best way to pay in a group of like 5 folks from random nationalities, and so I think that's pretty real.
If I may disagree a little bit with you, like from the communication perspective and journalist perspective, I think that it can become this killer app once it becomes CBDCs. And this will be, this is a risk for the whole crypto movement. And I'm a little bit worried that we are not yet at that level of perception of how privacy is important. I'm not even talking about crypto, Bitcoin, blockchain, but in general, the society is not that aware of the privacy issues. I mean, not here in this room, but in the world. And this may be a big risk that CBDCs will become that killer app.
Well, sorry, I just... look, I'm born in a communist country, yeah? And I am in this technology because of the freedom. Now, yes, Bitcoin initial movement is coming from the anarchists. Yeah, we are kind of like creating a separate alternative financial world. Vitalik is also saying the same thing. We are building a parallel financial system. I think this is wrong. We will always be marginalized if we create a separate financial world. I think us as an industry, we have to become the financial layer on top of the internet. Today, I'd like to rather send you USDC or like ideally, like Swiss franc as a stablecoin if we sit in a bar, I'd rather use like a lending, borrowing versus a bank because it's just so much more efficient. And in the future, we will have, you can like walk around here, you see AI everywhere. In the future, AI agents will be actually units or like programs on a blockchain generating yield or making revenue or, managing money. There is no bank which will open a bank account and give an IBAN to a autonomous agent, but blockchains will. So this is what we need to understand. Yeah, we are not building a parallel financial system. We are building a financial layer on top of the internet because it doesn't have one.
Do you agree?
There's a lot of things to consider. So 10 million monthly active users this late in the industry is not very impressive. There's 2 billion a day on Facebook products. So, and we don't need, Facebook didn't need to educate us how to use their products, right? You just start using it and
it doesn't educate about the importance of privacy either.
Yeah, no. So, but I guess the point I'm making is, like, as an industry for for the topic, which is how do we keep growing sustainably, we need to have easier onboarding, better user experience, and no one's solved it yet. So, like, whoever does, it's going to be a major deal. So that's its own consideration. And then the other side, which you kind of dove into, is if we become just a second layer of the internet using all the existing financial products, but just making it a bit easier to swap and issue debt, whatever, it doesn't really fulfill the mission, which is to create independence from the system, because if everything aggregates to the USD, which they're printing into, infinity, I guess you still have Bitcoin and ETH, but it doesn't, figuring out how to create stable coins based off of the decentralized protocols, which no one has solved either, and those tend blowing up, Ponzi scheme type things. I just don't see how going all in on building around the US dollar is really going to get us to where there's a healthy balance where the managers, the central banks, need to actually take consideration into if they're going to print or not, instead of just having a monopoly.
But how sustainable is it to actually move away from the?
I don't think it's about moving away and as the anarchist side and saying we're splitting off now. I think it's more about having a solid infrastructure to fall back on. It's a backup plan. So if the dollar goes poof, there's something to pick up the pieces and keep moving forward.
Well, but I think we also have to prepare this world because this will be a big shock for the crypto industry.
Yeah, but I think the reason Bitcoin was invented was to prepare for the shock that was going to come.
What's your time horizon?
It was I don't know, for the Americans, it was Occupy Wall Street and the financial collapse. That's how the revolution started in the US. And the first time I ever heard about it was 2009 when a libertarian presidential candidate was talking about sound money, gold, silver, and then this new thing, Bitcoin. So that's how it kind of was starting. And so a time horizon, things look pretty bad in the financial system. So I just don't see how it's the sustainable path to try to just side with the banking system and create more tools for them.
But I guess it's not strictly like an either or, right? It's one of the nice things about blockchains is just it's a platform layer that anyone can build arbitrary things on. So in a sense, it's kind of it's not mutually exclusive, right?
Yeah, no, build for everything, right? It's a business too. If you're building things to improve banking tools, you can operate and profit that way. So it's healthy. But we also need to kind of keep the focus as just make it super easy for someone to join the blockchain and have access to both sides of the asset classes.
I think we've mentioned different facets of the word sustainability. So, Fredrik, to you, how do you think this current growth is sustainable in the sense of sustaining the original values of the crypto community?
I think it's still unclear. Say, prices are up somewhat, and maybe there's some excitement in the air, and I think it's it is a risk that the growth is sort of quote unquote unsustainable. I think the use cases need to be stronger and clearer, and I would agree with you that like 10 million monthly active is like maybe not super impressive at this point, and so we as an industry like need to really prove that we're valuable and useful. And I think as I alluded to initially, I think what is exciting is I think the tech is rapidly becoming better, and so the costs are coming down, and so these things I think are playing out in a real way. But I think that the space still needs like this hero use case, and I think there's a risk. Like basically, you had both 2017 and 2021. Where there was a lot of hype, a lot of narratives, and sort of the human species is prone to get excited about these things, but I doubt I think the amplitude of each cycle is going to go down unless there's like clear tangible utility being proven.
Totally agree with you. I actually told you that I would start with this question, but I totally forgot. So let me bring it now. How do you see crypto here in Davos? And how do you see the local OGs from the web being receptive to crypto? And if someone of you has had more experiences of Davos than this year, share the dynamics.
Well, I would say, look, guys, like, I would say it's super important how we educate that audience on the promenade street and in the WEF, yeah? If we start saying 10 million is, not good enough, if we start saying, like, we don't have the hero use case, this narrative will not work. I think we have to be more positive about the technology. And I think we have to do a bit of future selling. Yeah, we have to say, look, there are 5 billion internet users. This is not our target market. Our target is, 10 billion wallets, because we want our autonomous agents. I want my money to be managed by an AI agent, and I want my car to be driven by AI agent, and I want this AI agent to pay, a penalty to the police if he does something. Yeah, so the market for our tech is really, it's not just 5 billion people. It's much more than that. And why we are doing this is because traditional financial system is not efficient. Why sending money is not as easy as sending an email? Why when I go on the internet, we are in 2024. Why when I go on the internet, I want to pay for something, I have to put my credit card with like the 3 numbers, whatever is the name, CVV or something, and it's not secure, and it goes through 4 banks, and every bank takes a fee. I think we can do much better than that.
Yeah, I think when you're, for this audience and discussing the pain points, it's important that we all address it. But when you're pitching the investor or the NGO on the benefits and the potential upside, it's enormous. If there's 10 million users and we've already achieved and created this much value, it can just be trillions more. So from an investment standpoint, the risk-reward ratio is amazing. And the benefits of the technology are very clear. It's not hard to showcase that. The comments regarding working with WEF-style crowds, that's an area that Partisia Blockchain is very experienced in. It's one of our focus areas. The thing is, you can't come to WEF and meet someone in an NGO or a government and decide to do the project overnight. It takes many months, 6 months, 12 months, just to get a plan agreed on. And then testing and trials, just with Red Cross, for example, we're in year 3 almost, and it's testing and it's in production, but it's still quiet and it's controlled and it's essentially beta testing, right? So it's not like you can rip these things out and unleash it to the whole world overnight. So it's a journey, and it takes a lot of time and dedication and follow-up, and that's just kind of the experience that we have. So, but they are receptive.
I think one mental model I have for crypto is that it's kind of like Uber, and so before Uber, there was this system of taxis and taxi medallions, and there was some like allocation of that, and the intention was that you would be like an honorable operator of a taxi, and there was some kind of trust baked into it, and so that's how people could like trust that they could get in a cab with a stranger. And then I think Uber came along and made a objectively better system for creating that trust and giving you nice, convenient, cheap access to rides and all of that. But obviously that was like a big clash with the established way of doing it. And I think like crypto is very similar, where there's a way of sending money around the world and storing money and all of these things. And then there's crypto, which is like, I think has a novel, useful way of solving this in a totally different way. But obviously that is like a huge crash with the current system, and arguably it's like a Uber versus taxis on like a 10 to 100x scale, with like the incumbent having more power, more vested interest, more like political, sort of power. So I think, and what you saw with Uber is like they did not play it super well in terms of like how they interacted with regulators and the establishment. And so I think if there's a lesson, maybe it is like, you have to talk to those folks and try to, ensure that they perceive what you're doing as a true value add to the world. So in that sense, I think it's great that the industry is here and talking to the people in power. Yeah.
We are in power. Thank you very much. I really enjoyed all the insights. Thank you very much to everyone who has listened to us. Thank you, 1inch, for organizing this. In my personal opinion, I cannot imagine the WEF without 1inch parties anymore. Thank you very much.
Thank you.